Good morning, everyone. Namaskar, Sat Sri Akal, Suprabhat, Kencho, Vadakkam, etc. So it's good to see you all again. I am C. Ankit Sharma, your income tax faculty for the session. So I believe, students, that you are working really hard to achieve the goal of your life to become a chartered accountant as soon as possible. So when we left, we have completed our income under the head house property. And I believe after that house property, you must have gone through with the provision of PGBP head, capital gain head, income from other sources, then clubbing set of provision deductions. And after that, TDS, advanced tax, TCS provision, and you must have completed recently return filing procedure. So we are at the end of this subject and we are going to cover chapter number 9, that is income tax liability, computation, and optimization. So we are technically at end game. And of course, now income tax has been almost completed. In this chapter, what we are going to cover. First of all, understand in this chapter what we exactly going to cover. So it's a good news that this is a summary chapter. In this chapter, we are not going to cover anything new. There is only two new topics which we will discuss in this chapter. One is AMT provision, alternate minimum tax. What is AMT, etc.? We will discuss it in this chapter. And one is to find out the optimized salary structure, that how to design the salary structure for an employee for minimize his tax liability and increasing his cash income. So these two topics are new. Otherwise, everything is already we have discussed in previous chapter. So this chapter is technically does not have anything new, but it is the utmost chapter of your this subject because this is the chapter from which the question number 1, which is compulsory question, and when it asks to calculate you tax, then that means this chapter comes into play. In this chapter, you will see when there is a requirement of calculation of tax and computation of GTI and total income. So how do we start our question and how do we need to close it? If you remember, in basic concept, in the introduction part of this income tax chapter number 1, basic concept, there was a topic which says computation of total income and tax liability. And in that topic, starting from residential status, then heads of income, etc., etc. So there were almost, I believe, 15 steps. The last was, I guess, filing of return of income. In the same way, whatever we have discussed in chapter 1, at that point of time, we were not aware about the provisions of residential status, about the provision of salary income, TDS concept, etc. So I have told you in that chapter that we will discuss these topics one by one in later on in this subject. Exactly in the same way, now we are moving on to the last part of this subject, and in this topic, we will again go through with that exactly step number 1, 2, which is residential status provision, then heads of income, then deductions, etc. But the difference is now we have covered all those topics. We know the provisions under this topic. Just a second. Okay. So before starting the class, okay, so good morning, Sridhar. Good morning, Tanisha. Good morning, Harshal. Good to see you all. And examinations there, of course, after 1 and 2 months, you have to appear in your examination. And I believe you must have done everything nicely. And you must have on a revision track also. Good morning, Mathili. And as usual, before starting the class, there is a thought for the day for today's class. And it says, the more you sweat in practice, the less you bleed in battle. Very impressive and very interesting form. What it means the more hard work you will put in right now before your examination. Like examination is just like a battle. So if you will practice more, if you will give more time to your studies, if you'll revise your topics. So if you work hard this time, that will help you to less bleed in battle. So we are talking about a battle, but it is not that kind of battle. But the bleed means you will not get nervous. You will be confident and you will get the good mark. So when you will see your result, there would be successful. So when it is unsuccessful, that means you are bleeding. So the more practice, the more hard work you will put in this time, you will get the better output. So it is a correlated thing. Whatever input you will give for your studies, you will get the proportionate output also. The result would be, of course, similar. So if this is the last 2 months, and let me tell you, whatever you can sacrifice right now. So sweat as you can, practice as you can, work hard as you can. And if you are going to utilize these 2 months correctly with your hard work, etc., let me tell you, you will be less nervous, you will be less impatient, you will be more confident for your examination. So that was thought for the day. And of course, we will have a story also at the end of the class. So studies, I hope आप लोगों की अच्छी चल रही होंगी. So our income tax is going to end. So before discussing, let's see the topic, and this is chapter number 9, in which we will discuss income tax liability, computation, and optimization. Now, this chapter is covering technically the calculation of tax liability. And when we say calculation of tax liability, it covers everything. Because if you want to calculate tax of any person, you have to go through with the residential status, because that is important for the purpose of taxability of the income. Then you must have know the provision for all heads of income, whether it's salary head of income, income from house property, PGBP, capital gain. And under these heads, you must know the specific exemption, deduction, and the provisions which are included under these heads of income. So you would be able to compute the relevant head income, whether it's salary, etc., etc. After heads of income, you must have understood how to apply the clubbing provision, if there is any relevant information regarding it, how to go for set of provision, and set of includes intra-head, inter-head, and of course the deduction concept. And whenever you are going through with these concepts, a very interesting, a very important thing you must keep in your mind: the default tax regime and the optional tax regime is key. Because when you are going through under heads of income like salary, house property, PGBP, other source, so if you need to calculate the income under default tax regime, the provision would be slightly different in comparison to the provision of under optional tax regime. You have to skip certain exemption, like in salary, you cannot claim the exemptions of HRA if you are under default tax regime, education allowance exemption, hostel allowance, etc., etc. Of course, in case of income from house property, you must have gone through with the provision that if we are under default tax regime, we cannot claim interest on loan if the property is self-occupied. In the same way, under PGBP, you have to leave certain deductions if you follow default tax regime, like additional depreciation, section 35 AD, section 35 scientific research, even section 10AA. Under capital gain, there is no as such bifurcation for default tax regime and optional tax regime. But under income from other source also, you have to understand that there could be different provision applicable, like in case of pension, etc. Even in case of salary, standard deduction is different. Under optional tax regime, it's 50,000. Under default tax regime, it's 75,000. So whenever you are computing, whenever you are applying any concept under income tax question, please remember that there is default tax regime and optional tax regime, and you have to apply the provision accordingly. Even in case of set off, if there is a loss under income from house property and you are following default tax regime, you cannot take that loss under inter-head adjustment, not allowed. And in case of optional tax regime, the set off as inter-head adjustment is allowed, but up to maximum rupees 2 lakh. Then we come to deduction. Almost deductions are allowed under optional tax regime. Generally, only 3 deductions are allowed under default tax regime. So any one of you can explain in short or can name those 3 deduction which we can claim under default tax regime. Maithili is saying 80 double JA. Dhanlakshmi is saying 80 triple J. ये नई डिडक्शन आई है कोई. 80 CCH, 80 RRQ. Maithili is saying contribution to Agniveer. If you do not remember the section, it's okay. You can tell me the name of deduction as Mr. Amar Shinde told me, contribution to Agniveer Corpus Fund. Exactly correct. Very good. 2 more. One is for new employment, 80 double J double A. And third one is employer contribution. Kambri Karanjan is saying 80 CCD2, 80 CCH, 80 double J double A. Exactly correct. Well done. Very good. So there are only 3 deductions. We can take the benefit of these 3 deductions under default tax regime. All other deductions are only available under optional tax regime. So we will solve those questions also. The huge questions. The type of question which would be your compulsory question of 15 marks in the examination under this chapter. So this is the chapter which will automatically which will revise your all previous heads of income provisions, whatever we have gone through earlier in this subject. So after applying deduction, you will find your total income. Because after set off and clubbing provision, you will get the GTI. And after reducing deduction from GTI, you will get your total income. And then you need to apply tax rates. And there would be 2 kinds of rate. One would be as per person wise, that means slab rate, which would be applicable on person wise. If you are an individual under default tax regime, the slab would be different. Under optional tax regime, it would be different. If you're a partnership firm, the rate would be 30%, etc. And there are certain incomes, those are taxable on a special rate of income. We call it a special rate of income. These kinds of income are going to be taxed as per the income nature, not as per the person nature. Can you name any income which we can call our income which is taxed as a special rate of income? Students, any income? You must have gone through with the provision now. So we must know what are the incomes. Those are going to tax as per a special rate. Maithili is saying long-term capital gain. Dhanlakshmi is saying long-term and short-term. Dhanlakshmi, not all short-term. Certain short-terms income having a special rate. Kambri Kararanjan is saying 112A, 111A. Correct. So short-term which falls under section 111A having a special rate of income. Section 112 is having a special rate of income, long term, and a special long term under section 112A is also having a special rate of income. And one more. Can you tell one more income which include under income from other source having a special rate of income? Which it is? Who will tell me? Lottery income, correct. The casual income having a special rate of income, 30%. So on the total income, we have to apply these rates. And after applying these rates, you will get your tax. And let me tell you, it's not only the rates. You have to apply the rate. I have already told you in the chapter number 1 basic concept. Then whenever you calculate tax, please remember, first you need to calculate tax. Then write it down rebate, if applicable. Then write it down surcharge, if applicable, and then cess. After applying these 4, now you will get your total tax liability. Understood? Golti is saying, sir, I'm always confused how to include capital gain income in total tax liability. Could you please explain this, sir? Look, I believe you must have gone through with the calculation of tax rate. in case of capital gain chapter. The faculty must have told you how or what tax of rate you need to apply in case of capital gain. If you are having still any confusion, I will upload a sheet in which I have made a diagrammatic presentation to apply the rates in case of gross total income. And also we will discuss that kind of grammatical presentation in our question in tomorrow's class. So do attend tomorrow's class in which we will go through with the question. I will show you how to apply these rates in case of different rates of incomes, in which there would be section 112, 112A, 11A, casual income, etc. Okay. So we will cover it quality. Okay. So after calculation of tax, suppose my tax liability is, suppose the calculation of tax, now I am having a tax liability of 1,15,240 rupees. So is it the question ends over here, or is there any further step remaining which you have already gone through? Is there something we need to apply after calculation of this final tax liability? This is my answer, or we should also keep in mind that there could be something else also. Can you tell me? Is there something else, or it is the final answer I should quote and I do not need to bother about any other information? If I'm able to find out this, and suppose this is correct, so is it the final destination of my answer, or I should keep in mind something else also before saying this is my final answer? Very good, Amar. Absolutely. The Lakshmi also correct. Exactly, students. This is not the end of calculation of tax. Mathly, not marginally, because we are calculating tax after doing everything. This is even after marginal relief, etc. But there could be a possibility that in the question, assessee has deposited any advance tax or any TDS or any TCS. So these are the prepayment of taxes. These all are what? Advance tax, TDS and TCS. What we call it? These are the types of collection of tax which has been collected by the income tax department, or we can say we have deposited to the income tax department in the previous year itself on advance basis. Prepayment, prepaid taxes. We can call it prepaid taxes. So if a question says any prepaid taxes has been paid, the information would be in question, which could be advance tax, TDS, TCS, relief under section 89(1), any tax credit, etc. So these needs to be subtracted. And after that, we can see whether it's tax payable or it could be tax refundable. So this would be my final destination. So generally, I have seen that there are questions in which there is some TDS has been paid by the assessee. And the question is asking you to calculate the final tax liability. And what happens, students calculate this final tax liability and end their question. But suppose if there is any TDS has been paid 1 lakh, then you need to reduce it. After that, whatever you will get, 15,240 would be your correct answer. So please keep in your mind that there could be an advance tax payment, which information has been given in question, TDS, TCS, etc. And we will go through these kind of questions in our next class, which would be tomorrow. Today, we are going to discuss the provision and the two new topic, AMT and salary structure, and some question related to salary structure provisions. Understood? So what we are going to cover, we have discussed that. Now we will discuss these provision one by one. Let me tell you one more thing before starting the topic via notes. So there could be a possibility in the question, they can ask you to calculate total tax. And there are three possibilities. Either the question can ask you, the requirement could be calculate tax under default tax regime. So that would be a good news because you do not need to apply two regime. You just need to calculate your tax under the default tax regime. That's it. Either they can ask you to calculate tax under optional tax regime only. This is possible. So the question could ask you to calculate tax under default tax regime. So you will calculate the gross total income accordingly. You will calculate the total income accordingly, and then you will calculate the tax. There may be a situation that the question requirement is to just calculate your tax liability under optional tax regime. This is also possible. In that situation, we will calculate our, of course, GTI, then TI as per respective regime, and then the tax liability. Clear? But there could be a situation, the most probability of this kind of situation in the examination, that they will ask you to calculate tax as per most beneficial, which is most beneficial for the assessee. Now, when the question asks you to calculate tax which is most beneficial to the assessee or to minimize his tax liability, in that situation, we have to calculate tax under the both concept like this. Then the calculation would be more detailed calculation. In that situation, you have to calculate tax under default tax regime first. We can name it 1, tax 1. Then you need to calculate tax under normal provision of the Income Tax Act. Under normal provision, you have to calculate tax once under optional tax regime. We can name it 2. So there would be a tax calculation as per default tax regime. Then we need to calculate tax under normal provision. So there would be a calculation of tax under optional tax regime, as well as you need to calculate tax as per AMT provision also. Now, what is this AMT? How to calculate tax? Why is AMT, etc.? I will answer all these questions when we will go through with this topic under this chapter. For time being, AMT is also a kind of calculation of tax. So you have to calculate tax third time under AMT provision if applicable. So if in the question AMT provision is applicable, then only you have to calculate tax for AMT concept. When it is applied, etc., that we will go through later. So that would be a tax, we can name it tax 3. Understood? You can see how many calculations you need to do when the question relates to calculation of tax in most beneficial manner. Then out of this tax 2 and tax 3, you need to consider the higher tax. So under normal provision of the Act, we have 2 ways to calculate tax, either under optional tax regime or as per AMT provision. If AMT is not applicable, then only tax number 2 would be there. But if AMT is there, then you need to take the higher of these 2. Now suppose this higher name we have called 4, tax 4. It's not end yet. After finding out the higher of these 2, now you need to compare this tax 4 with tax 1. That means default tax regime tax. And out of these 2, now we need to find out the lower. That lower would be our, suppose this named is tax 5. That would be our final tax liability. Out of this tax liability, you need to reduce the advance tax, whatever we were discussing, TDS, TCS, etc. So you can see if the question is asking you to calculate the tax which minimize the tax liability of assessee or which is most beneficial to the assessee, then you need to calculate these 3 taxes. One is default tax regime, optional tax regime, AMT. Then out of point number 2 and 3, you need to find out the higher one. The higher one needs to compare with default tax regime and that the lower would be your final tax liability in the question. So you can see it is so messed up over here. Maybe it seems you little more complicated, whatever you have gone through till now. But let me tell you, once you are able to calculate the default tax regime tax, this optional tax regime and AMT concept is not that difficult or complicated. In case of optional tax regime, you just need to change your tax liabilities and you need to change your GTI, etc. So that does not need a lot of changes in the income or the tax structure. So it might seem to you a more complicated version of a solution. But let me tell you, the probability of this kind of question is very high in the examination. So generally they ask either calculate tax under both method, which is most beneficial to the assessee. But in those cases I have seen, generally AMT provisions are not applicable. So either you need to take tax as per DTR and tax as per OTR, and the lower would be your correct answer. But we will go through with these kind of question also in this chapter. So this is technically the summary of the chapter. So it takes us almost 20-25 minutes to understand what exactly we are going through under this topic. Now we will understand all these things one by one with the help of notes. So income tax liability, computation and optimization. As you can see, this chart will show exactly what you are thinking right now. So these are you can see your picture and you must be thinking what exactly is happening. We have already gone through with so much complicated provisions under income tax, and now what is this AMT? The tax calculation is really very difficult. So don't worry, I am there. I will make things easy for you. So computation of total income and tax payable, you can see, first of all, we have to find out the GTI, then deductions, if applicable under the respective regime, then we will have our total income. Then we have to calculate tax as per normal provision, that means optional tax regime. Then tax as per section 115 BAC, that means default tax regime, and AMT is also there. So everything is just messing it up. Let's make it easy one by one. So this is the topic. You can see we have already gone through with this kind of provision in the first chapter. That was also a similar kind of presentation was there in basic concept. That if you want to calculate your total income, the first step is to determine the residential status. So let me discuss these topics in very short. So you will recall the provision that will help you to understand this chapter more easily. So in case of residential status, we have gone through, like in case of a company, it's very easy to find out the residential status. Like you have to see the place of effective management if it is not an Indian company. In case of partnership firm, etc., is also very easy to find out based on your control and management. And so in case of HUF, the main provisions actually rest with residential status of an individual. And in case of individual, you must have remembered that either the assessee would be non-resident or he would be a resident. And in case of resident, there were two kinds of resident. One was normal resident, we can say that, and one concept was deemed resident. Remember? Section 6.1, Section 6.1a. Can you tell me the three basic conditions for becoming a deemed resident? There were three main conditions. If you fulfill these three conditions in case of an individual, you could be called a deemed resident. So can anyone tell me? Look, this topic, chapter number 9, you will be able to understand it very clearly if you have already started your revision, or if you have already completed the revision of at least under till heads of income. And if you have not done yet, my advice to you for tomorrow class, please try to revise provisions as much as you can, the heads of income, clubbing, etc. Well, even in short, but you have to revise it. Amar is saying stay for 182 days. Amar, for deemed resident, it's not required. We are talking about deemed resident, section 6.1a. For section 6.1a, there is no requirement of even staying for 1 day in India. Not required. So there are some other condition I am talking about. For becoming a deemed resident, this benefit is only available to a citizen of India. If you are an individual and citizen of India, this is the first condition. What is the second one? Yeah, Dhanlakshmi is correct now that you must have earned income exceeding 15 lakh rupees other than foreign sources, or we can say you must have income from Indian sources exceeding 15 lakh rupees. So you must have earned income from Indian sources exceeding 15 lakh. And the third condition, Harshal is correct, not pay tax outside. Kambri Karajan Simma is saying individual citizen outside India, 15 lakh income from Indian sources and not tax in that territory. Absolutely correct. And no tax in the country in which he resides. And of course, he's residing outside India. So if these three condition has been fulfilled and section 6.1 is not applicable because the provision says, first of all, you have to check section 6.1 condition. If the associate does fulfill section 6.1 condition to become a resident, then he will be called a resident. And then we will find out resident is ordinary or not ordinary. But if section 6.1 condition does not fulfill, then you can check the condition of deemed resident. In the examination, it's very important to understand whether section 6.1 is applicable and 6.1a. Even under section 6.1, there are basic conditions, or we can say basic case in which you need to calculate 182 days condition and 60 days plus 365 days. And there are special case also. There are 3 special cases. You also need to go through with the question that either special conditions are applicable or normal case it is. In a special case, you have to check 182 days condition, etc. So we have discussed that in detail. What I am trying to tell you that you have to check whether it's a normal resident or deemed resident. And if it is a deemed resident, it would be always resident, not ordinary resident. So in calculation of a computation of total income question, first of all, you might need to calculate the residential status of that assessee. And on the basis of that, you can decide which income is going to be taxed in his hand or not. So according to that, then you will go through the heads of income and then GTI, TI, etc. If you have attended the LVRC, the revision class I have taken for salary topic and house property, you must have seen we have discussed that kind of question in which we have to first find out the residential status. In case scenario question, there are multiple questions like this. And on the basis of residential status, we have to find out what would be his GTI, etc. So first thing comes first, in the question, there may be a situation in which you need to find out the residential status first. After finding out the residential status, the second thing is the calculation of income under separate heads of income as per the provision. And this is, of course, the most important part of a question in which you have to calculate total income. So there could be information, there could be a salary information in which you have to find out the salary income. Let me tell you once again, I also told this thing in the class which we have taken on 7th of July for students, the how to solve paper, the strategy class. We have a fortnight class of strategy. In that class also, I again asked to every student, please make a habit, just in case of every chapter, make a short note on a short paper and paste it on the starting of the chapter that what are the difference under default tax regime and optional tax regime under this chapter. On the first page of the notes, you can make a short note paper and you can stick it on the first page of your chapter. Like in case of salary, if you are under default tax regime, your sin deduction would be 75,000. You cannot claim HRA, you cannot claim education allowance, you cannot claim hostel allowance, etc., etc. So please make a short note of these kind of provision and stick it, paste it on the first page of your chapter. So whenever you will go through for revision of that topic, you will instantly understood that in this topic, if I am solving a question on a default tax regime, these would be the disadvantages, and this something I cannot claim. In the examination, when the question would be there, your brain will tell you that in this salary question, if you are following DTR, these are the difference which is in comparison to your optional tax regime. In same case, income from house property. If you're under default tax regime, the self-occupied property, the two self-occupied property value could be nil, but you cannot claim the interest deduction in case of self-occupied property. So can we say, let me ask you a very simple question. Can we say that in case of income from house property, if we are solving question under default tax regime, so up to two self-occupied properties, always the income from house property would be nil. Is this correct? This statement is correct or not? That in case of default tax regime, up to two self-occupied property, the income from house property, I can directly find out and I can calculate that is nil without thinking anything else. Is it correct statement or not? Dhanlakshmi is saying no. Why, Dhanlakshmi? Why no? What is wrong in this statement? In case of default tax regime, up to two self-occupied properties, can my income would be always, or will my income would be always nil or not? And you are saying no. Now you are saying yes. What is this? Yes, the correct answer is yes. Because in case of self-occupied properties, when we cannot claim interest benefit, so technically we cannot deduct anything. So the answer would be always nil. So you do not need to waste your time. So if the question says calculate your income under default tax regime, suppose there are three properties, two self-occupied, one let out. So in case of two self-occupied property, whether the information of loan has been given, you do not need to read it at all. Whether it's construction, pre-construction period interest has been given or whatever it is. You can write it down, it's nil value. So you need to focus only on the third property. That will save your time. So these kind of information, if you'll paste it on the first page of your topic, that will help you at the time of revision as well as at the time of examination also. Okay. Harshal is saying because there we check whether it's actually let it out. If that is self-occupied for the full year, then in case of two house properties, the value would be nil. Okay. So we have to calculate as per the respective heads, exemption, deductions, provision, the respective incomes under 5 heads of income. Then we come to PGBP. And of course, you know, PGP is a star head of income. Why it is a star head of income? Because when there would be a question of compulsory question, that would be majority based on PGBP provision. That would be a P&L. And then other income deduction, clubbing provision must also incorporate it in that question. So if it's a 15 marks question, I believe 7 or 8 marks only on this PGBP calculation. Other 7, 8 would be for calculation of tax, deduction provision, maybe other income also given like interest income or maybe capital gain income or maybe house property. But I guess 50% part would be based upon your PGBP provision. Under PGBP also you should remember the concept is different for default tax regime, etc. Then of course the capital gain concept. The capital gain concept, the calculation of capital gain, applying the provision of indexation, when we can apply, when we cannot apply, and exemption provisions also. Then income from other source, you have to calculate your income under income from other source also. Once you have done this, now you have 5 heads of income, but this is not your GTI still, because you have to apply clubbing provision, set of concept. Then after applying these clubbing and set of concept, you will have your GTI. So compute income under each head, applying charging and deeming provision. It is talking about these 5 heads of income calculation, whatever deduction, etc. is under these respective heads of income, you have to apply it, and deduction exemption. Then you will go for clubbing provision and set off and carry forward and losses provision. After that, you will arrive at your gross total income. After gross total income, there is deduction under section 80C to 80U. Those you need to give. Out of these, only 3 applicable, if that is default tax regime, and other deduction can only be claimed under optional tax regime, including these 3. So once you find out the deductions which we should given out of our GTI, you will arrive at your total income, and that is the income we call taxable income. We can call it total income. We can call it income chargeable to tax also. What will after this? After this, we need to apply the tax rate provisions. So what is the meaning of total income? Of course, we have understood the whole concept till now. Total income of an individual is arrived after making deductions from your GTI. After clubbing, set off, you will arrive at your GTI, and after reducing deduction from that GTI, you will get your total income. Point number 2 is income to be considered while computing total income of individual. So it's just giving you a detailed concept to understand that if you are an individual, then what income would be part of your total income? Of course, the 5 heads of income will become the part of your total income. This is simple. We have already discussed. Yes, if you are a partner of a firm or a LLP partner, in that case, you will include your individual's income as well as any income received from the partnership firm. And generally, we receive from a partnership firm salary, interest, etc. So these will also become part of my total income. Suppose Mr. A is a partner of XYZ partnership firm. He is also running his proprietorship business. So he's running a proprietorship business also, and he's a partner of XYZ also. He's also having some dividend income. He's also having some income from house property, etc. So these 5 heads income, business, other source, house property, etc., would become part of his total income that we have gone through in point number 1. And if he is a partner of any firm, then whatever he will receive from this partnership firm will also become part of his total income. Generally, he will receive salary, remuneration, fees, bonus, commission, etc., and interest and profit from partnership. So these 2 would be the part of his taxable total income, and profit is going to be exempt because on this profit, partnership firm already paid tax. So only the salary, interest, bonus, fees, commission, whatever we receive from our partnership firm, and that is also the allowed part. The allowed portion of that salary, bonus, commission, etc. is going to be taxed in the hands of a partner. So the income mentioned in point number 1 and 2, you can see that only that is allowed as a deduction to the firm would become part of my income. Share of profit is exempted under section 10(2)(a). In the same way, if you are a member of HUF, again your individual income as a proprietor, as a house property rent, etc., and any income generated from HUF would become part of your income. But any share of income of HUF is exempted, etc. So you can go through with it. Income of other person included in the income of the individual. We are talking about clubbing provisions. So generally, when we talk about the total income concept, it means your total income, whatever income you have earned. whether individually or being a partner also, etc. So those are going to be the part of your income. But there are circumstances in which some other person income is also going to be the part of your income. That is called clubbing provision. So you have already gone through with this concept clubbing. So these are also going to be the part of your income for calculation of your total income. Understood? Any confusion, any query? Actually, we did not discuss anything new. We are just going through the provision we have already gone through in the previous chapters. So computation of total income and tax payable, the same thing is revised. The first point is again, we have already discussed determination of residential status. The residential status of an individual has to be determined to ascertain which income is to be included. Of course, the importance of residential status we are discussing. The duration, etc., will depend. If it is a crew member of an Indian ship, the provision will change. An individual could be a resident and ordinary resident but not ordinary resident, and it could be a non-resident. Then we have the concept of deemed resident also we have gone through earlier. So after applying the residential provision, you will find out the residential status. And why it is important? Because the incidence of tax, the taxability of income, the impact of taxability or the inclusion of income under that individual head of income will depend upon his residential status. Like for example, income which accrue outside India and is received outside India is taxable in the hands of a resident and ordinary resident, but is not taxable in case of a non-resident. In the case of a resident but not ordinary resident, such income would be taxable if it is derived from business controlled in India or profession set up in India. Generally, if you are a resident and ordinary resident, all incomes are taxable in your hand. Whether that is arise outside India, arise in India, that is irrelevant. If you are a non-resident, only two kinds of income is taxable. If it is arise in India or received in India. If you are a resident but not ordinary resident, then income arise in India is taxable, received in India taxable, arise received outside India will be taxable only when the business has been controlled or set up from India. Okay. Then step number 2, classification under different heads. We have already gone through with these provision under separate heads like salary, PGBP, etc. Computation of income under each head. So you have to apply the exemption, deduction, etc. Those are applicable to the respective heads of income and then calculate your income. And again, I am telling you that default tax regime, etc. is very important. You have to follow that concept like it is saying that in case of default tax regime, you cannot claim the benefit of house rent allowance, children education allowance, etc. These are only exempted under optional tax regime up to a certain limit. Then we have different standard deduction available under salary head of income. Under default, it's 75. Under normal, it's 50,000. In same case, under PGBP head, like you cannot claim additional depreciation, section 35 deduction, scientific research. Okay, can you tell me what is the difference of deduction available for scientific research in case of default tax regime and in case of optional tax regime? Chalo, let me make it simple. Only one kind of deduction is allowed in respect of scientific research under default tax regime. Which expenses related to scientific research is allowed under default tax regime, student? Who will tell me? Very good. The Lakshmi is saying, Harshal is saying university approved. Wrong, Harshal. In case of default tax regime, only in-house scientific research expenditure is allowed. Any payment to any university, any outside donation, contribution is disallowed. Approved donation is allowed only under optional tax regime. But under default tax regime, only in-house scientific research expenditure is allowed. There is certain exception also, not in case of land, etc. But only allowed in case of in-house scientific research. So these kind of small points you have to keep in mind, because these kind of simple mistakes will hurt you a lot in the examination. Clear, bachcho? Yes, in-house research for business purposes allowed. Then we are having clubbing concept. You have to apply those clubbing provision. Again, in case of clubbing, there is an exemption which is only available under optional tax regime. Which exemption is available under optional tax regime in case of clubbing provision? Who will tell me? Very well done, Dhanlakshmi. You know all the answers. Very nice. 1,500 rupees in case of minor child, or the amount of income which is club under section 1032. Correct, Harshan. So that clubbing exemption is applicable only in case of optional tax regime, not in case of default tax regime. Well done. Then after clubbing, we have to go through the set off or carry forward and set off of losses. So set off is having two part, intra-head and then inter-head. And remember, you have to apply them in this systematic order only. First, you need to try to set off losses under intra-head concept. And if that is not possible, then you can move to intra-head concept of setting off of losses. You cannot apply firstly inter-head and then intra-head. And the third step would be, even after applying the inter-head, if still loss is not set off, then you need to carry forward them for future years. So we have multiple kind of losses, and those are having a specific number of years for which you can carry them forward. And that in case of some losses, it's 4-year time limits. In case of some, it's 8-year. And in some case, it's infinite. Can you tell me one example of each of them? For 4-year set of example, for 8-year set off, and one is infinite. Can you give me example? One example for each of these category. Depreciation in 35 AD is infinite. Very good, Dhanlakshmi. 4-year for capital loss. Amar Shinde, I believe this is not correct answer. For long-term, short-term, it's 8-year. Speculative, you can say 4 years. For normal business, method correct, 8 years. And long-term, short-term, it's 8 years. For speculative, it is 4 years. Okay, very good. Well done, students. Unabsorbed depreciation also infinite, absolutely correct. So you have to always keep your mind that what loss I can carry forward. Why these years are important? Tell me, if there is a practical question, then why carry forward provision is important? You just need to tell that this loss going to be carry forward. Why should I remember that for how many years this can be carry forward? Because I do not need to solve the future year calculation. So if I'm solving a question of assessment year 26-27, so why do I need to remember these limits that I can carry forward it for 4-year, for 8-year, or for infinite? I do not need to solve it practically, because examiner will not ask you to solve question of assessment year 28-29. So we can write it down, this can be carry forward. But why these year limit is also need to be remembered for the purpose of practical solution? Yes, absolutely correct. Because we need to understand from the point of view of earlier year losses. Suppose my business income has been given in question, we have calculated, and my PGBP income is suppose 20 lakh rupees. Now the question say there is a loss for previous year 1617 of 3 lakh. So I know that 1617 loss of 3 lakh for a normal business cannot be set off in my 26-27 year profit because 8 year has been already passed up. So for brought forward losses, you should remember that if there is a question which says there is a brought forward losses of capital gain relevant for year 21, 22 or any other year. So if you know that for how many years this loss could be set off, you will be able to get that set of concept correctly in the current year question. So of course, the limit should be remembered for the purpose of solution in your current year income for the brought forward losses. So first of all, we have to go through the inter-source set of loss concept. Inter-source means intra-head. Okay, it's not inter-head, it's inter-source. That means we are talking about intra-head, you can say. आप उसे intra-head भी कह सकते हैं और inter-source भी कह सकते हैं. Then inter-head, the second step, and then you can carry forward and set off of losses. After doing this, you will arrive at your gross total income. From that gross total income, there are multiple deductions. Deductions from gross total income. Certain deductions are allowable, and we have already gone through with these deductions. Some deductions are on expenses base, some deductions are on investment base, some deductions are for income base. There are certain deduction which is based upon your income. 80 QQB, 80 RRB. These are kind of deduction which is based on your income, not on your expense. Other deduction, etc. And of course, the notes is saying that under default tax regime, you can claim 80 CCD2, 80 CCCH2, and 80 JJ. Only these three deductions are allowed under default tax regime. Computation of total income. After reducing it, we will arrive at our total income. The total income should also be rounded off to the nearest of multiple of 10 rupees. Please remember it. In examination also, you should follow this. Whatever your total income, please round it off to the nearest multiple of 10 rupees. Clear? Then, of course, the tax calculation, the default tax regime and the optional tax regime. Both is having surcharge also and different rebate concept also. So not only the rates are different, as well as the surcharge concept and the rebate concept is also different. Rebate concept is easy under optional tax regime. If your total income is up to rupees 5 lakh, you can have a rebate of maximum 12,500 or the amount of tax, whichever is lower. So it is as simple as that. But in case of default tax regime, the rebate concept is different. There are two rebate concepts. Up to 12 lakh your income, you can claim a rebate of 60,000 or amount of tax, whichever is lower. And even if your income, your total income exceed 12 lakh rupees, still you can claim a rebate applying the specific procedure. That is a kind of marginal relief. The concept is just similar to marginal relief. We cannot claim it marginally, but the concept is called similar to marginal relief. We have the rate of taxes in front of you. In case of default tax regime, up to rupees 4 lakh, there is no tax. Then for next 4 lakh to 8 lakh, the tax is 5%. That would be 20,000. Then for the next, it would be 40,000 extra. So total would be now 60,000. Then for next, it would be 60,000. So total would be 120. For next, it would be 80,000. So aggregate tax would increase. For next, it would be 1 lakh. So aggregate would be increased, and above that, the rate would be 30%. Okay. In comparison to default tax regime, optional tax regime is having different basic exemption limit also. We are having separate basic exemption limit in case of default tax regime. In case of optional tax regime. In case of default tax regime, the limit is 4 lakh, whether you are a resident, non-resident, age is irrelevant, etc. in case of individual. But in case of optional tax regime, the limit would change. It could be 250, 3 lakh or 5 lakh depending upon the individual age and residential status. Then it's 5% rate, then 20% and then 30%. Then we are having some special rate of taxes. These are the rates of taxes which would be taxed according to the income. Then we have surcharge provision. There is only one difference in the surcharge provision of normal and under default tax regime. Under default tax regime and under optional tax regime, the surcharge concept is same. But it is only having one difference. One key difference is there. So can you tell me what is the one key difference under default tax regime surcharge provision and under optional tax regime surcharge provision? Mathali is saying 37%. Exactly correct. Under optional tax regime, if your total income exceed 5 crore, the surcharge rate will go up to 37%. But in case of default tax regime, if your total income exceeds 2 crore, the surcharge rate would be remain 25%, even if after your income is exceeding 2 crore, 3 crore, 5 crore or 10 crore. Other surcharge concept is same. In the basic concept topic, I have discussed the surcharge concept with you also with the help of diagram and question. So in the examination, please keep this in your mind that what surcharge need to apply when income exceeding a certain limit. Up to 50 lakh, there is no surcharge. From 50 to 1 crore, the surcharge would be 10% of tax. From 1 to 2 crore, the surcharge rate would be 15%. From 2 to 5 crore, the surcharge would be 25% under optional tax regime, but would be 25% in case of default tax regime for other case also. And in case of surcharge, please remember the marginal relief concept also. If your income slightly exceeding this 50 lakh, in any question, if the income is slightly exceeding 50 lakh, like if it is 51 lakh, some amount, 52 lakh, 53 lakh maximum, then you need to understand that you should check the marginal relief concept also. Again, if the income slightly exceeding 1 crore, you need to apply that. If income slightly exceeding 2 crore, you need to check that whether marginally applicable or not. It would be really crucial for your examination point of view. Okay. In case of default tax regime, you can see the surcharge rate is 37% if your income exceeding 5 crore. Again, in case of dividend, etc. income, the maximum surcharge rate would be 15% always. And how it needs to be calculated, we have gone through with that in detail in basic concept chapters. If you have any confusion in case of surcharge concept, you can go and watch the basic concept class. That would be absolutely crystal clear over there. Now the rebate concept, as we have discussed, in case of default tax regime, this rebate is easy. But even if your income exceeds the specific limit, you can claim the rebate up to a certain amount of income. And we have discussed that amount, that if your income is, in case of the second case, you can get this rebate if your total income is 12,70,580 rupees. Up to this limit, you can have the rebate benefit. If income exceeds this limit, then you do not need to calculate rebate in default tax regime. We have discussed this also in our basic concept provision. Clear? So you can apply these rebate provision accordingly, and you can find out the final tax liability after applying the surcharge if applicable and rebate and cess concept. Health and education cess is the easiest thing to understand. It would be 4% always, and we can say if there is tax, there would be cess at the rate of 4% under both the regime. After calculation of all these calculations, this is the technically we can say the recap, whatever we have done. why I have tried to explain certain things from the provisions, whatever we have already gone through. Because this chapter is going to discuss each and every provision you have already gone through in your previous lectures. So I've just tried to summarize those concepts. So when we will solve a question under chapter number 9, you will have some idea that exactly what we are doing. And of course, as I have told you, we will solve multiple questions in next class. So you have today, if you want to revise your PGBP provision, it's my request, just revise at least these 2-3 topics to understand the provision for tomorrow's class. Please go through with the basic concept provision. Basic concept I'm talking about the rates, the surcharge, and the rebate provision. Only these provisions. Please go through it once. Okay. Next, you need to revise PGBP provision because most question is based on PGBP concept. Then you can also go through with salary basic provision. So at least please revise this much before our next class. So that will really help you to understand the concept more clearly. So now we are up to our new concept of this chapter, which is AMT, calls alternate minimum tax. It is applicable on individual, HUF, etc. Let me tell you, before AMT, I guess in year 2001 or 2002, a concept has been introduced for companies only, and that's called MAT. And I guess MAT was applicable in 2001-2, I guess so. And MAT was applicable only in case of companies. Till that time, there was no concept of AMT for other than companies. So for companies, there is a concept of MAT, and the full form is minimum alternate tax. After some year, government realized that this kind of concept should be for other than companies also. So they have introduced this AMT, which is for other than companies. Understood? What is MAT? I can say you, MAT is more wider than this AMT concept. So we are not going to discuss MAT concept because it would be discussed at final level. It is not as for intermediate level. We have only AMT concept. But I'm just trying to tell you that from where AMT has been originated. So it is not an independent concept. This concept has been derived from MAT concept, and you can see the name is also just changed like that. MAT was minimum alternate tax, and they have changed it to alternate minimum tax. They could also do like this also. They can do this also. MAT for company, MAT for others, but they say no, we will find out a new name. So AMT concept is fully based on MAT. Suppose this MAT provisions are 10 points, AMT is only just 2 or 3 points. So MAT provisions are huge, much complicated. And in comparison to MAT, AMT is just out of 2 point out of 10. So it's a good news for you that AMT is simple. Before going through the concept of AMT, for the calculation part of AMT, I can teach you the calculation part in 10 minutes, that how to calculate the AMT profit and how to calculate the AMT tax. But that would be an incomplete information for you. You might not able to understand, or some of you students will think why this AMT tax is there. So before going through the calculation part, which is over here, just like this much calculation you need to understand in case of AMT, and very specific calculation, very fixed provisions are there. You need to add back only these 2 or 3 things, and you need to reduce this thing, that's it. But you will not be able to understand, and you will not satisfied that why we are discussing AMT concept, why AMT has been inserted in this calculation of tax. There is already default tax regime tax calculation, optional tax regime calculation. So what is the objective of introducing AMT in our tax structure? So let me tell you first that thing. So that will make concept clear for all of you at once, and it is one of the most unique concept, I must say, most interesting concept, I must say, in Income Tax Act. So why AMT is there? To understand that, let's take an example of a business. As much as you will understand the reason of or the object of AMT, maybe you will be very fascinated with this provision. Some of you definitely is going to say, wow, what the provision. Now, what was happening practically, a businessman, suppose there is a business and हो क्या रहा था इस business में, एक business है मान लीजिए that is XYZ. And this business was, we have know that business prepared two trading in profit and loss account. One is for accounting purpose and one is for income tax purpose. And exactly this is what we do in PGBP head. What we do in PGBP head, we take the net profit as per accounting provision. We add back expenses disallowed, reduce some income which is not included under PGBP head, and then we will find out our net profit as per income tax act. So technically, there are two profit and loss account prepared by a business. One is for accounting purpose and one is for income tax purpose. Clear? अभी हो क्या रहा था? Understand this. This business XYZ, when it shows its trading in profit and loss account as per accounting provision. So this business was showing huge profit. This business was showing huge profit. The profit was, suppose net profit was 200 crore. Business अच्छा था, sale अच्छी है. Suppose sale is 1200 crore after reducing expenses, etc. As per accounting provision, all expenses, salary, purchase. Suppose this business is earning 200 crore rupees profit. Clear? So what will be the impact of this profit? This business image will go up. The business can claim loans from bank, etc. easily. People will trust on this business. People are ready to invest in this business. Suppose it is a company. Suppose, of course, AMT is not applicable in case of company. For company, it's MAT. But the basic concept is same. Suppose this XYZ is not a firm. Suppose it's a company. And shares are listed. So this company is going to distribute dividend also. Because it's having huge profit. Due to this profit and dividend and market condition, the share price will go up. Practically, this is going to happen. The company image will improve, dividend distribution, people will come to invest, bank will provide loan, and the market share and price are going up. This would be happen on the basis of the this profit and loss account, which is based on accounting concept. Now the same company, now the same organization is declaring a net profit as per income tax provision. So what must be happening? In this net profit, we are going to add back, etc. So suppose after this add back, etc., what is exactly happening? As per income tax, the same business is showing sale of 1200, but declaring a net profit. Suppose a loss of 10 crore. How it's possible? It is possible. Suppose in this net profit, either we can do this allowed disallowed concept or as normal also, due to section 35 AD. Suppose this business having an investment under section 35 AD building, it invests 600 crore building. And when we talk about the accounting concept, the accounting does not have anything like section 35 AD. The accounting will provide you only 10% depreciation on this building, which would be only 60 crore. So this 60 crore must have been claimed as expenses in case of this net profit of 200 crore, already deducted. But when this is income tax, under section 35AD, it says you can claim 100% deduction. So what must have happened? We must have claimed 600 crore instead of 60 crore. So my profit must have decreased by how much? My profit has been decreased by 540 crore rupees due to this section 35AD advantage, which is under income tax, not as per accounting. There could be a possibility that we have claimed additional depreciation on some machinery extra 20%. There is no section 35 AD concept under accounting. There is no additional depreciation concept. So under accounting, you must have claimed only normal depreciation. And under income tax, you have claimed normal depreciation, extra 20% additional depreciation also. So what will have the effect? The profit will reduce. The same business. Then there is scientific research contribution concept under section 35. Suppose this business give 10 crore contribution to a scientific research association. So income tax will say, okay, we will allow you a deduction of 10 crore. Accounts will say, no, no contribution allowed because that is not for your business. So this scientific research payment will also not allowed under accounting. So what is happening due to income tax deduction, etc., those are not available under accounting concept. Your profit will decrease. The same business profit, the sale are different, but the profit will decrease. And we have also section 10AA. Suppose your business is availing a deduction of section 10AA. Under section 10AA, you can reduce your profit by 50% or 100% on the basis of a specified formula. You must have gone through under deduction chapter, that is export turnover divided by total turnover into the business. So we have claimed some section 10AA deduction also, which is not available under PGBP, sorry, under accounting concept. So you can see why this difference is there, that the same business is declaring a net profit of suppose 200 crore, but declaring minimum profit or maybe loss under income tax concept, even when sale, purchase and basic expenditures are same. So what will happen? When you will go and see the accounting profit and loss account, you will see, okay, this business is very good, earning a lot of money. So when income tax departments go and watch this business, they say, okay, this is a very good business and we will earn a lot of profit and we will earn a lot of tax from this business. But when they will see this income tax profit and loss account, the tax would be nil. So government is not collecting anything from this business, which is earning huge income and showing huge profit under accounting provision. Even if you'll go through with this concept more detailed purpose, now you understand, you are saying what is happening, but it is not the full picture of this condition. Under accounting, if we'll take this section 35AD, this business will claim 60 crore depreciation every year, 10% every year. And because we have claimed 600 in the first year, so what will happen? In this year, though, we must have some loss. But in future years, because we were not able to claim any reduction out of this 600, your profit will increase. This is the whole concept of depreciation. The depreciation you are claiming 10% every year. So your profit will decrease only by 60 crore or 10% every year. So your profit range would be remain constant because you are claiming expenditure at the rate of 10%. So your profit cycle would remain same. But if you will claim full 600 crore in the first year, that means in the first year, your net profit will go down or it may result in loss. but slightly it will, in the next year, it will go up because now you cannot claim the benefit of any of expenditure under section 35AD. So exactly, accounts say we will allow you 600 crore, but in 10 years. Income tax say we will allow you in first year. So what will happen in first year? Your loss will be huge, but the next year profit will increase, and the loss, whatever you have, will be carrying forward and absorb your profit. So can I say one thing? Listen very carefully. What I'm asking you is very important because your answer will decide whether you understand the concept till now or not. Can I say that the aggregate of profit for the next 10 years would be almost same in case of accounting and income tax? In this year, you are seeing a huge difference. As section 10 AA deduction you are claiming, but section 10 AA deduction you will claim for 5 years or 10 years. After those 10 years, though, you will not be able to claim section 10 AA deduction. So there will be profit in this business after 10 years. Even in case of additional debt, you are claiming extra 20%. So you are claiming 20% in the first year, but in the next year, automatically your depreciation would be less in comparison to accounting depreciation. So in aggregate of agar we will check, so in next 10 years or 15 years, the aggregate profit would be almost same or not? Think it and tell me. Harshal is saying, yes, no, it would be almost same. Not this huge difference would not be there. It is like this. If suppose what is happening, practically if you understand, it is almost same. Suppose there is a family. Let me make you understand from your point of view. Fine, you are living in a family and your pocket money is, suppose monthly pocket money, your parents gives you 5,000 rupees per month as your pocket money. Clear? So family one, a child is receiving 5,000 rupees per month. So in a year, he is receiving 60,000 rupees pocket money. Now family number two, they say we will pay you not monthly but half yearly. We will pay you 30,000 rupees pocket money half yearly. So in a year, you will get 60,000. The third family is saying we will give you a pocket money yearly 60,000. So you will get it 60,000 at once. Suppose the fourth family say we will give you this amount of after 5 years. So first year you will not get anything, but in aggregate after 5 years, on the basis of 5,000 per month, we will give you full pocket money. So technically we are talking about 3 lakh. So this fourth family child will receive 3 lakh rupees in 5 years. He will also receive 3 lakh rupee in 5 years, but yearly basis. He will also receive 3 lakh rupees for 5 years, but half yearly basis, and he will receive 3 lakh rupees again in aggregate in 5 years, but in monthly basis. So they all are receiving the same amount of pocket money, but the duration is different. So this child would always having 5,000 rupees per month. So his income would be regular, like accounting profit we were talking. You can see a stability in his income. He will expense the same amount of expenditure on his party or refreshment and whatever it is. So his expenditure would be normal. Now in this case, for starting 4 or 5 months, he does not have any money. After the 6 months, he will get this money. So starting 6 months, you will see he does not have anything like income tax profit. He does not have any money. But after that time, after 6 months, he will get the money and his expenditure would be different. He can make huge expenditure at once because he have now huge amount at once in his hand. In the same case, this also, and in the same case, this also. You can see this is like our income tax concept, and these are like our AMT concept, in which the total profit would remain same, but due to additional depreciation, due to section 35AD benefit, etc., your initial year profit would be less in comparison to your future year. इतनी बात अभी समझ आई? हिंदी में समझना है किसी को ये वाली बात अभी तक? Or English is fine for all of you because this concept is slightly different, not that easy. Aggregate profit would be almost same, correct? मतलब we are not talking exactly same, but there would not be that much difference. Okay, सब समझ गए? Very good. Yes sir saying Dhanlakshmi, what is for yes sir? Hindi, I need to tell you in Hindi, or is it okay we are going through with English? Galti is saying, sir, income tax profit will be without any fixed cost for next 10 to 15 year and it's true profit. Okay in English? Done. Chalo. Now, if till now you will understand, you will think the procedure is this simple, that aggregate profit would be almost same, etc. But there is a problem. Government will think, okay, there is no problem, we will get the tax in future years. We will not getting in first year because of this concept that the initial year profit would be less or there would be no profit. But when this section 10AA unit will earn profit in export currency after 10 years or after 15 years, then we have the foreign currency as well as we have the tax also. This section 35A deduction we have given in the first year, that will result in loss. So this loss would be carry forward for set off, and after 2, 3, 4, 5 years profit, it would be set off. Then we will recover the profit from it. Same in case of additional depreciation, etc. So more or less the concept was simple, that to boost the business, to encourage the business, section 30 of it is for specified business. Additional depreciation for manufacturing unit. 10AA is for SEZ unit. Scientific research contribution to promote research in our country. You can understand these deductions are for the benefit of country, directly or indirectly. So if any business is involving in these kind of deductions, so we will have patience. No problem. You can claim loss for initial some year, but we know that we will have the profit for multiple years. For 5 or 10 years, we will not claim any tax, but for next 50 years, we will have the huge profit and then we will collect the tax. So that is not an issue. And also these businesses are for the benefit of our country. So that was the mentality of government. But now the twist came. What if we were thinking that section 10AA business will pay us after 10 years? So for 10 years, the whole profit is exempted, 100% in some case and 50% in some case. So profit was exempted. So we are collecting tax for 5 years, no tax, and for 5 years, half of the tax. And we were waiting after 10 years. Suppose what if after 10 years this business shut down? Suppose we are waiting for section 35AD. Okay, you have claimed in first year, and for next 4 or 5 years, the loss incurred would be set off from profit, and after 6 years, suppose we will claim the profit and we will recover the tax. What if this business shut down after 5 years? What if you have claimed additional depreciation, extra 20%, did not pay tax for 2 or 3 years, but after 3 years this business shut down? The real problem will arise in that case, and it was happening. Practically it was happening that government was providing benefit, expecting that after some year we will get the extra tax. But what has happened? Some units are closed, whether intentionally or not. In any case, government will lose lot of tax. That business has earned 200 crore in first year, 100 crore in next year, 150 crore in third year. Huge profit. But when the fifth year came, it shut down. So for this profit, government could not charge any tax. And that would be the loss of the revenue. And that was happening in certain cases. So I'm just trying to tell you this concept in a very simple, but the situations were more complicated. Let me tell you in your language. Abhi, if I'll say you, so you can see these all are same condition. In all the cases, the child will get the 3 lakh rupees. But that is not practically true. If this is the scenario, the child will get 5,000 rupees per month. So the risk is very low. He will get 5,000 every month. Suppose after 5 months, in this case, after 5 months, the financial condition of the family goes down, or your parents angry with you and they say no pocket money. We will not give you any pocket money. So in the hope of getting 30,000 at one time, you are not getting anything. And the saddest part is for this child. This child has been told that we will give you 3 lakh rupees after 5 years. So he was surviving every month. Okay, I will get 3 lakh rupees. In the dream of that, I will get 3 lakh rupees after 5 years. And what suppose the pocket money concept cancelled by the parents? We will not give you anything due to any reason. Then this is a huge loss. So this is what happening with the income tax department. And there is one more problem. It is not only he is losing this 3 lakh rupees. You can see this is not only losing 30,000 or 60 or 3 lakh. How he will survive for these 5 years, that is also a problem. He does not have any pocket money. He was waiting, okay, I will get this money after 5 years. But after 5 years, one shock that he is not getting anything. The other problem, how you will survive for 5 years, how you will utilize your expenses when you does not have any money. Maybe you need to take the loan from others, or you need to survive bare minimum in the hope of huge profit. So for those 5 years also, it's very difficult to run yourself. In the same way, government needs revenue. Why government needs tax? For infrastructure facilities, for providing education, for running our country. So income tax was waiting, okay, no problem, we will get this money after 10 years. So after 10 years, suppose the business shut down. So there is a problem that we will not get revenue from that business. That is the saddest part. The problem is one more. How government will run this country for these 10 years? So they need revenue regularly. So to solving these two problems, generating revenue regularly, we cannot take revenue from this unit because we have said that we will give you this deduction. So when you will arrive at profit after 5 or 10 years, then we will only collect tax. Government has made this provision. But then government realized there is two problems. One is this problem when business shut down. And when we will not recover anything regular, it's difficult to run the country. So for solving these two problems, AMT concept has been introduced. So now when we will go through with AMT concept, now you will understand why it is in place, why I am reading this topic. If I am going to tell you that students do one thing, this is our AMT calculation provision, take this value, add this, deduct this, you will arrive at your AMT and then we will follow it. So maybe you will be able to understand the AMT, but there would be a lot of question in some students' brain that why it was necessary, why we are doing it. We have already having two tax regime, optional and default. Then what is the need of doing this? So that's why I have just explained you in short. And let me tell you, this is our shortest concept we can make you understand because AMT is based on MAT concept and MAT is massive. So if you have any other confusion regarding AMT, so you have to wait till your final level because in this level also we do not need to understand the AMT concept. I have just explained it to you for your knowledge. So you will understand the concept when we will go through with the provision of AMT. Understood? So what AMT is doing? AMT has been made for these losses to stop. Any unit, income tax, if showing income tax losses. So due to the help of AMT, you can recover the tax regularly. And even if that unit shut down after 4 or 5 years, income tax department would not be in that much of loss. When it was, it must have been if the AMT is not there. Now, how AMT works? So we have understood the concept of AMT, but how it works, how government solve this problem, even under income tax, how we can collect the tax. This we will discuss under AMT calculation process. So that would be discussed after a short break. So can we, Sanket, can we take a short break of 10 minutes? Sanket, can we take a short break? Thank you. Sangeet ji, can we continue? Welcome back, everyone. I believe you must have your coffee, tea, etc. So we were discussing the provision of AMT, and we have understood the objective of applicability of AMT. Now, on the basis of this AMT concept, we will discuss how AMT is going to solve the problem we have just discussed. That in case without AMT, there was cases when there was business taking benefit under income tax, when at the time of paying the tax, that business may be shut down, etc. So what AMT exactly do? Look, when there's a calculation of tax question, I've told you, which is for most beneficial to the assessee. So you need to calculate tax under default tax regime, and then tax as per normal provision. Under normal provision, there would be calculation of tax as per optional tax regime and AMT provision. Tax as per AMT provision if applied. Now to calculate this AMT tax, government has done nothing. They have just removed the benefit which you actually claimed under optional tax regime. How the profit has been reduced? By taking the benefit of section 35 AD, 10 AA, etc. So in case of AMT, how you will calculate your income? First of all, we have to calculate the ATI, adjusted total income. In case of, like, we need to calculate GTI and TI. In case of AMT, we have to calculate ATI, and on this ATI, we need to pay a tax of 18.5%. This is fixed rate for every SSC, other than a company we are talking. So there is no slab rate, etc. The tax rate is fixed 18.5% plus surcharge, if applicable, as per the surcharge provision, plus 4% cess. Clear? Now this calculation of ATI is relevant. How to calculate ATI? So it says the benefit of these deduction 35 AD 10 AA, which you have claimed to arrive at the net profit. You must have calculated your net profit under optional tax regime as per income tax. Take that net profit, add back section 35 AD deduction, add back section 10 AA deduction if any has been claimed, etc. Then this will be your ATI. If I'll ask you, or if you can see, this ATI would be approximate equal to your DT, default tax regime, total income. Or you can say this would be almost equivalent to your accounting profit. Because under accounting profit and default tax regime, in both section 35 AD, 10 AA, additional depreciation benefit is not there. So by adding back the specific deduction due to which your profit has been reduced, that has been given away. So those deduction need to be added back into your profit. And what exactly is going to happen? You have a profit, you have a total income which would be almost equivalent to the default tax regime total income, or we can say as per accounting profit, whichever you has been shown in accounting profit and loss account. So that was the basic intention. We need to calculate, we need to remove the benefit, and on this ATI, the 18.5% tax with surcharge and cess need to calculate. Then tax on this optional tax regime, which may be nil or very low because of the benefit of section 35 AD 10 AA. But when we add back these deduction into this profit, now this tax would be high. Obviously, this would be high because there would be ATI and rated it is 1.5. This would be your higher tax. This we need to compare with our tax as per default tax regime. And the lower would be your final tax liability. So for calculation of AMT, we did not do anything new. The deduction you have claimed under optional tax regime, which is the root cause of reduce your profit into very low profit or resulted into loss. We just remove that deductions benefit. So automatically when deduction is not there, your profit would be either equivalent to default tax regime profit or income, or it will be almost equivalent to your accounting profit. That was the intention. And because your profit would be there, then 18.5% tax would be automatically higher. So technically, we are not charging as per slab rate. Generally, this would be the higher tax if this deduction has been claimed, generally. And that means government is charging 18.5% tax regularly from your organization, not 30% as per slab rate, etc. They are charging 18.5%. Now, if you understand this concept, let me first discuss exactly how to calculate this ATI with the format. But abhi one more question should have been in your mind, that if I need to pay this 18.5%, then what is the fun of these deductions? These are irrelevant. Why these deductions are here? Because when government is going to take away the benefit of these deduction and going to charge 18.5%, so what is the benefit of section 10AA, section 35AD, in which government say we will not charge tax or we will give you the this much deduction? Ultimately, so I have to pay 18.5%. And if you'll aggregate the slab rate, 5%, 20%, then 30%. So the average slab rate would be almost like 20, 24, 5%, and government is charging 18.5% from me. So what is the real advantage? There is no advantage technically, but just wait. We will go on that topic also. First of all, let's find out how to calculate your ATI for the purpose of AMT tax. One very important message to all of you. Why AMT has been introduced, the objective we have discussed, that is not relevant for your examination purpose. Examiner will not ask you why AMT is here. The reason is not going to be asked. That is for your knowledge, that you should understand what we are doing. Because if I'll not tell you the reason, you will not able to understand why this calculation is happening over here. So in the examination, what they will ask you to calculate ATI. They will ask you to calculate the tax. They are not going to ask you why these provisions are there. So this is just for your knowledge. And calculation of ATI is not difficult. Let me show you how to calculate this ATI. Very simple provision. This is the AMT summary. AMT will be applicable as follows. Find out your regular income tax liability as per normal provision of the Act. So for tax liability, this point is talking about tax as per default tax regime, as per normal provision, optional tax regime. So this point is talking about this, that you should find out your normal tax liability as per normal provision. Now step number 2, you need to find out the ATI. Find out ATI of the non-corporate assessee. And ATI calculation is as follows. This is very, very easy. You need to just add back 2 or 3 things and your ATI would be there. First of all, you need to take total income as per Income Tax Act. Remember, we need to take the total income, not net profit. The total income as per optional tax regime. So whatever your total income in this optional tax regime, you need to consider it. The total income, not the net profit. In this total income, you need to add back. These are a specific deduction. Only 3 deduction you need to add back if already has been claimed. 80 QQB, 80 JJAA, 80 RRB. So if these deduction has been claimed, then only these 3 deduction needs to add back. If you have claimed 80C, 80D, 80DD, DDB, etc., all are allowed. You do not need to add it back. Only if these 3 has been claimed. If claimed, you need to add it back. Understood? Then deduction under section 10AA. If claimed, this also need to add back if claimed. So if from this total income you have claimed these deduction 3 or 10AA, then you need to add it back. Deduction under section 35 AD. If claimed, so if you have claimed section 35 AD deduction, then you need to add it back. Depreciation on 35 AD should be reduced. So if you have already claimed the depreciation, that is going to be reduced, but the deduction 35 AD full need to be added back. Suppose 50 crore was the investment in section 35 AD. So you must have claimed full 50 crore before arriving at this total income. So now you need to add back 50 crore. And suppose it's a building, then you can claim the 10% as a depreciation, 5 crore. So the net impact would be plus 45 crore. That's it. No additional depreciation, no other deduction need to add back. You just need to add back 80 QQB, double J, double A, RRB, 10 AA and 35 AD. This would be your adjusted total income. Now, the note say if ATI exceeding 20 lakh, then AMT apply, otherwise AMT provision not applicable in case of individual. Now, after calculating ATI, step number 3 says apply 18.5% tax surcharge as per surcharge provision. What does that mean? If ATI exceeding 50 lakh, then only surcharge applicable at the rate of 10%. If ATI is 40 lakh, no surcharge. Treat this ATI as TI and apply the surcharge concept. If ATI exceeding 1 crore, then surcharge would be higher, 15%. Okay. So ATI, consider this ATI as your TI and apply the surcharge concept. 4% cess you need to apply. Step number 4 would be total liability and total income. Now, tax liability and total income would be step number 1 or step number 3, whichever is higher. That means this dono higher needs to be your tax liability. Step number 1 is tax as per normal provision of the act. So step number 1 is step number 3. The higher would be your tax liability and respective income will be your total income. And now the higher needs to be compared with default tax regime tax status. That would be your final tax liability. Understood? So calculation of ATI is not at all difficult. You just need to remember these 3 points. 80 QQB, double J, double A, RRB. You need to add it back. 10 AA if claimed and 35 AD if claimed. The depreciation on that 35 AD can be claimed. We will see how to calculate it in a practical problem also. Understood? But the problem is having with assessee. Assessee is saying that if I need to pay this 18.5% after claiming section 35 AD, 10 AA, 80 QQB, RRB, etc. So if I reduce my profit to nil or it is a loss, I was thinking I do not need to pay anything. But you inserted the provision of AMT, so I need to pay 18.5% tax. So what is the benefit of this deduction? There is no use of this deduction technically. So income tax say relax. Whatever you 18.5% you will pay, we will give you the tax credit of it. You will get the tax credit. Just like ITC in GST, we will provide you a MAT credit. Right? MAT credit in company. So this would be called AMT credit. So if you need to pay, don't worry. We are not fetching any benefit from you. If you need to pay tax on your AMT tax is higher, then we will provide you AMT credit for it. So do not bother about it. That AMT credit you can utilize in future to pay your income tax liability. So we are just taking that tax as AMT, but we are providing the credit of that AMT to you, just like an IT. Now you must be confused how this AMT credit will run. So let me show you with the help of an example. might be thinking, what is happening? Why income tax is so complicated? But I think it's beautiful. It's a beautiful provision of AMT, and now the AMT credit is here. How this will work? Suppose in first year, your optional tax regime tax was suppose 1,000 rupees, and your AMT tax suppose 1,100 rupees. Now we need to pay whichever is higher. Clear? Now whichever is higher, so that means tax need to be paid 1,100 rupees, because AMT provision tax is higher than the optional tax regime tax. Quality is saying, sir, AMT credit will be given during loss. Just have patience. We are solving the question. You will get to know how to claim the AMT credit. Okay. So in this case, you need to pay to the government 1,100 rupees as income tax of this year, year one. So you have paid it to income tax, but whatever excess you have paid, the excess you have paid in comparison to normal optional tax regime, this 100 rupees would become your AMT credit. And you can claim that credit in next 15 years. The time period is 15 years. So the next 15 years, you can claim this credit against your income tax liability. Year 2. Suppose now optional tax regime tax is 600 and AMT is 900. So higher you need to pay 900 rupees. You cannot claim the credit of this, because credit can be claimed only in the year in which your normal tax liability is higher. Until the AMT tax is higher, you cannot claim the benefit of credit. So in this year, you need to pay 900 rupees to the government, and how much credit you can claim? The difference would be your credit. In this case, because 600, 900, the difference 300 rupees would be your credit. This credit could be utilized for next 15 years, and the 100 rupees credit which has been relevant for last year, the time period remaining is 14 years. The credit of 100 rupees now can be utilized for next 14 years. So total credit you are having is 400 rupees. Out of which 300 is having an expiry of 15 years, 100 is the expiry of now 14 years. Now suppose in third year, your optional tax regime tax is 800 and your AMT is 750. So now you can see, because in this year, this was higher. Now in this year, this is higher. So now in this year, you can claim the AMT credit. So what would be the tax liability in this case? The tax liability, the tax needs to pay to the government is 800 rupees. And how much AMT we can claim? How much AMT credit we can utilize? The AMT credit we can utilize, remember, we have how much credit we have? 400. And how much AMT credit we can utilize out of this 800? No, not 400. Only the difference of credit can be utilized. The difference of tax, that credit can be only utilized. So government is very smart. So the difference is only 50. So out of this 400, only 50 rupees credit can be utilized. Understood? Suppose if it is over here 650, then 150 rupees credit can be utilized out of this 400. Now tell me one thing. If I utilize 50 rupees credit, so that would be this 100 rupees part I should utilize, or this 300 rupees part I should utilize. We will utilize this 100 rupees because the time duration is less. So now 750 needs to be paid to the government. And the remaining credit would be now 300, remaining year 14, and 50 rupees credit remaining year is 13. If 13 years has been passed away and you are not able to utilize the credit, then this would be lost. This would be lost. You cannot utilize it any time further. Now, if you will, in a whole scenario, now if you understand this AMT concept from the objective point of view, first of all, then calculation of AMT tax, and then this AMT credit. Now, if you combine all these three concepts together as a consolidated concept, then you will understand how smartly government plays. Regularly, you have to pay tax to the government. Even if you are having credit, you can utilize only that credit when your income tax normal is higher. In that year only you have the advantage to claim the benefit. How much credit you can claim? The only excess part over AMT you can claim as a credit. So due to this concept, the business will pay a certain regular cash flow to the government, which will help the government to run this country. And even if in this case, the company is not able to generate profit after 10 or 15 years under optional tax regime by anyhow, so the credit will be lost. So that would be with the income tax department only. Suppose for next 12 years more, the AMT tax is always higher in comparison to this. That means this for 350 rupees, which is with government, will automatically be lost. So the total tax would be higher and government will have a certain cash flow from that business. So government plays very smartly by applying these provisions. Government say, okay, we are giving you section 35AD, etc. So for initial year, you are paying tax, but after 5 or 6 years, because the objective is this, section 35AD 10AA benefit is for 10 years or 5 years. So after a certain year, your profit will increase automatically. In comparison to AMT, your normal tax would be very high. So in that situation, out of that excess, you can claim your credit. So the things would be normalized. So due to this concept, the government is actually giving the benefit of this section 35AD or 10AA only to those units. Those are working for long time period. Those are not intentionally or unintentionally closed after 5 or 10 years after taking the advantage. So this benefit would be available, we can say, to the genuine industries only now. Only the genuine business who wants to run this business as a going concern for 10 years, 15 years, 20 years, 15 years, 40 years, and actually participate in the national building by providing tax benefit in the future year. Initially, they want to establish, so their cash inflow due to tax is lower. So if they will run after 10 or 15 or 20 years, till that time duration, in that situation, this tax benefit would be there. So logically, government has provided the benefit with the help of AMT only to those organizations. Those are in actual business and they have intention to run this business for long time duration. Understood? This 50 rupees is not a credit, sir, which we deduct from 50 from 800 is not a credit, sir. We have deducted out of that 100 rupees credit, whatever we have. We use 50 rupees from that AMT credit from this 800 rupees value. So that 50 is from that 100 rupees credit we have earned in the first year, Mithali. Okay. Yes, God. It is the stabilization of entire system. And it is technically, if you will say initially, if you only understand the objective, then if you will understand the AMT provision, then if you understand this credit, you might feel messed up why this is so. But think about from the point of view of government, they actually trying to provide the benefit to real businesses. Those intention is to actually run that business for long and provide the benefit to government as well as to the society. The Lakshmi is saying, first year I had investment in 3580, but next year I will run business without any investment there. Should I need to calculate AMT for second year also? You have to calculate AMT for every year. But if there is no deduction of section 35AD available that year, you do not need to apply this provision. AMT concept need to be applicable only when section 10AA, 35AD or RRB, QQB, etc. deductions are there in the question. If these deductions are not there, you do not need to apply the AMT provision. Even if you will apply, automatically the normal tax would be higher, but you will not liable to apply. You should not apply the provision until there is section 35AD, 10AA or 80QQB, RRB, etc. deduction is there. Mithili is saying, one more doubt, sir, is AMT credit is like GST ITC. Look, I'm just telling you, it is like a credit. GST ITC is a very different concept. You can say it's a credit concept like a ITC. But GST ITC on purchase, you can set it off against GST liability. There is nothing like that. It is a credit concept. As you have in wallet some credit of AMT, which you can utilize, like a point system you have in Amazon, etc. You may have on Flipkart some points, and points can be utilized only on your next purchase. You cannot convert it into cash. So it is just like that. This AMT credit is like it's just some points with yourself, and you can utilize these points on your next purchase. Next purchase would be that year in which your normal tax is higher than your AMT tax. And the difference of that, only that much amount of point you can utilize. It is just technically like that. चलो अब आते हैं प्रोविजंस पे. अब इसको एक बारी पढ़ते हैं हम लोग. Now the credit concept. Excess paid can claim at AMT credit. We are continuing note number 1, 2, 3 we have discussed. Then the credit concept. Point number 2, it says, in next 15 years as provisions of MAT, credit can claim in the year in which normal tax should higher than AMT tax. In that year only you can take the benefit of credit. Credit means normal tax less AMT. So that excess can be claimed as credit, the 50 rupees thing what we are discussing. Tax credit allowed even if adjusted total income does not exceed 20 lakh rupees in the year of set off. So suppose you have a credit of 400 rupees in year 1. In year 2, suppose adjusted total income is only 10 lakh. So AMT not applicable, normal provision applicable only. So even if AMT is not applicable, then whatever your tax, you can claim the credit out of it. So if adjusted total income does not exceed 20 lakh, that means your AMT liability would be 0. So higher would be normal tax, and full difference credit you can utilize in the next year. I can show you what exactly they are trying to tell with the help of example. Suppose in 4th year, your normal tax is 300. And as your adjusted total income is only 14 lakh. So AMT not applicable. Even if AMT not applicable, AMT tax technically is 0. So now whichever is higher is 300. The difference is 300. So for now this 300, you can utilize this 50 rupees as well as you can utilize this 250 rupees out of this value. So tax liability would be nil. So if AMT is not applicable due to your ATI liability, which is less than 20 lakh, that would be a great news because you can utilize the difference as from your AMT credit. So now remaining would be 15 rupees credit and the remaining time period would be 13 years. So even if the adjusted total income is less than 20 lakh, in that year also you can utilize the benefit of AMT credit. Now the 5th point you will understand automatically. If a person deciding to pay tax under default tax regime, then you need not to apply the AMT credit provision. So if you decide that you need to pay tax under the default tax regime, then there is no liability to calculate tax as per AMT provision. Understood why? Because automatically section 35AD is not there, 10AA is not there, reduction 80 QQB, RRB is not there. So what is the fun? Because in normal case, in this case, your default tax regime total income would be automatically high. So no need to apply AMT provision when the tax is going to be paid as under default tax regime, as well as if tax is going to be paid under default tax regime the AMT credit can also not be utilized. So please understand, the AMT credit not applicable if the tax liability is paying under default tax regime. Now, this is the theoretical provision. What I have make you understand with the concept. This has been written over here. That why AMT is there, because of we need regular cash flow, etc. So Income Tax Act contains profit link and investment link deduction in order to encourage. So you can read it and you will understand it now easily. That for the welfare of industry, for the welfare of country, some units are zero paying tax. So for the purpose of this, we need to apply AMT concept for collection of a certain amount. So that would help in nation building. Adjusted total income, how to calculate? We have seen that in the format I have shown you. You can go through it. Tax rate, surcharge, everything has been summarized in the above format I have prepared for you. Section 35 AD, etc. Tax credit concept, you can read it in a paragraph if you want. Everything has been discussed. In case of assessee not having income from business, this is about when you can pay tax under default tax regime, when you can pay tax under optional tax regime. The question says if you do not have any business income. I believe this concept must have been discussed in return filing of income also. So if you do not have any business income, in that case, you can switch into any mode in any year. In this year, you can pay taxes per default tax regime. In next year, you can pay as optional tax regime. In the next year, you can again come to default tax regime. There is no restriction. But if you are having business income, you can opt out from default tax regime only once. If you are paying default tax regime, then you can come out of it and you can pay tax under optional tax regime. And if you go back to again under default tax regime, then you do not have option to again go back under optional tax regime until you do not have any business in. So I believe this concept must have been discussed in detail under return filing concept. After calculation of tax, the TDS, advance tax, TCS you can deduct, and after that you will arrive at your final tax liability, that is tax payable or refundable, depends. Fine. Now the second new concept under this chapter is tax planning, tax saving in respect of salary income. Now this topic does not have any specific answer. The question says how to structure an employee's salary to minimize his tax liability and maximize his cash flow. Now, the structure of salary is depending upon multiple factors. Upon where you are going to serve, what is your place of office, what kind of perquisite you required, whether you need any conveyance allowance, whether you having a house over there or you need a rent-free house, whether house rent allowance is required, etc. So there are multiple factors which can affect your salary structure, and there could not be any specific answer of this question. It will be a subjective question. It will change according to the situation, etc. The major reason why we need to change it, etc., that we will discuss in this topic. Let me see if there's any query. Mathil is saying it means we can get back the amount from AMT credit, sir. Yes, you can get that AMT credit benefit if you are normal business in tax under optional tax regime is higher. Galti, sir, in case of loss, how will, if there is a loss, Galti, there would not be any tax liability. And if you do not have any tax liability, how you will utilize your credit? If the loss continue, then after 15 years, your AMT credit will be zero. And if you have a loss in a normal business, not due to section 35 AD, 10 AA, etc. If loss is not due to these case, that would be a genuine loss. In that case, your accounting also showing a loss. So the genuine loss, if the account show the loss, that would be a genuine loss. So we are talking about those cases in which in accounting you are showing profit and in income tax you are showing loss due to these deductions. So if you saying that in case of loss. If it is a loss due to any other factor, except section 35 AD, etc., that would be a genuine loss. In that case, government understand that you are not able to run the business. So automatically there would not be any AMT tax. But if the loss is based on section 35 AD, etc., then this AMT credit can be utilized. Nithali is saying, okay, sir, I understood the AMT concept completely. Congratulations. But you will understand this AMT concept completely when you will be in final and you will read MAT. When you will read MAT, then you will recall, okay, that was the AMT concept and that was only 20% of the MAT provision. So MAT is almost huge, gigantic topic, and AMT is just like 10-20%. But this will help you when you read MAT, the basic principle you will understand why MAT is there. Okay, chalo. So tax planning in respect of salary, and it says the definition of salary is very wide and includes not only monetary salary but also benefits and perquisite in kind. Under the default tax regime under section 15 BAC, the only deduction available in section 16 in respect of salary income is the standard deduction, which is 75,000. Under optional, it is 50,000. Deduction for entertainment allowance you can also claim, and the deduction for professional tax you can also claim under optional tax regime. Now the salary structure, how do we plan a salary structure? An employer may plan the salary structure of employee keeping in view the deduction and exemptions available under the Act. If salary is paid as a consolidated amount without any breakup, the amount of salary after providing standard deduction up to 50 or 75 would become taxable without any further exemption and deduction. Therefore, the employer may structure the salary by including various allowances, perquisite, etc. for the benefit. Now, let me tell you why it is subjective, why it is not possible to get the answer of this question same for everyone. Chalo. Let's understand, suppose you are a chartered accountant. You will be a chartered accountant. For time being now, you assume yourself as a CA. Now here is Mr. A, who is your client, comes to you and asks, and suppose you are in Delhi. And Mr. A comes and asks to you, sir, I got an opportunity of doing a job and I have two options, option one, option two. One employer is ready to pay me 25 lakh rupees per annum, and one employer is ready to pay me 30 lakh rupees per annum. Same job timing, same work scenario, everything is same. And the salary is 25 lakh rupees from employer one, and employer two is giving me an option of 30 lakh rupees per annum. So what I should suggest as a being a CA, what you will suggest him, which option is better for his inflow, etc. Very simple question, very layman question. Second option, of course, 30 lakh rupees. Obviously, there is nothing complicated in this question. It's a very simple, basic question. But being a CA, we cannot answer like this. We have to ask some more question to him. Suppose you have suggested him, go for option number 2. He said, okay, चला गया वो. 3 महीने बाद आया आपके पास आफ्टर 3, 4 और 6 मंथ, सर ये क्या करा दिया, तो गलत हो गया. आपने कहा क्यों? आपने तो मुझे 25 लाख का ऑप्शन देना चाहिए था. You suggested 30 lakh rupees. That is completely wrong. Why? Because he said, you did not ask me, because we did not ask him. This 30 lakhs job was in Bombay. And this 25 lakh job was in Delhi itself. He has a home over here in Delhi, or initially he's already resided in Delhi with his family. And you suggested him 30 lakh rupees. He went to Bombay. He take a house on rent, which cost 10 lakh rupees. Then conveyance expenses, suppose 5 lakh rupees. Then meal expenses, lunch, etc. 5 lakh rupees. So technically he spent 20 lakh rupees. The cash flow he is having only 10 lakh. And in this case, because he reside in the same city, so conveyance expenses would be like 2 lakh rupees only, etc. So the cash inflow would be more than 20 lakh rupees. So technically we cannot answer on the basis of this. There are multiple factors which could affect this decision. So suppose if my client comes to me that I have a job offer and 25 lakh rupees and 30 lakh rupees, I cannot suggest him that go for 30 lakh rupees. I will ask him, is 30 lakhs in the same city or outside city? If he say no, I need to move on to another city, then I have to see how much extra expenses do you need to incur when you will move on out of your city. He say, okay, 20 lakh would be my expenditure. In that case, this is not a better option to opt for this. This is a better option because technically you are having more inflow. Yes, if say I'll get 50 lakh rupees if I'm going to Bombay, then I could suggest him, okay, in that situation, you must have 30 lakh rupees, which is comparing to this 20 lakh is far better. So while deciding, Abhi still it's not complete. It's not just that it is as completed. We are going more deeper in this. So for deciding a salary structure, only these two things are not matter. The salary structure does not mean that you can decide the correct answer on the basis of his total payment in a year. Now let's change this question. So I've just shown you that other factors also important, not only the salary package. Now suppose Mr. AR client comes to us and say, I am having a package of, the company is offering me a package of 50 lakh rupees. Suppose Mr. A belongs to Delhi and he says, company is offering me a package of 50 lakh rupees in Bombay. How I should structure my salary? Company is ready to pay me this 50 lakh rupees. Now, because he will be moving from Delhi to Bombay, so I will ask him, okay, let's make an approximate expenditure. What you need to incur in Bombay? He said, I have to pay rental expenditure would be there. I have to take a house over there. There would be expenditure on conveyance. There would be expenditure, some daily expenses. There could be travel expenditure also. There could be lunch expenditure also. So we need to calculate approximate how much these expenditure would be if we'll switch to Bombay from Delhi for this job opportunity. And we have calculated 15 lakh rupees would be the expenditure. So technically he will have 35 lakh rupees in hand. Still it's not over. Now the real problem is he is asking me how to structure my salary. Employer is ready to pay me 50 lakh rupees. So how I will structure my salary of this 50 lakh rupees so I will have higher inflow and lower tax liability. He would have two, of course, objective to higher his cash inflow and lower his tax liability. Now we have two options. Suppose option one, if I said to him that go for basic salary, take this 50 lakh rupees full amount in your bank account under basic salary plus dearness allowance plus bonus plus commission. Just bifurcate your salary in these 4-5 category. Take this 50 lakh rupees as a whole soul. Now what will happen in this structure? In this structure, he will take that 50 lakh rupees in his account and the expenses we have estimated that was 15 lakh. He needs to find out a house himself. He will pay rental expenditure for conveyance. He will pay for daily allowance. He will pay himself. But he does not take any kind of allowance from employer. So his own expenditure for rent, etc. would be 15 lakh. 35 lakh he would have with himself. So can you tell me on which value tax need to be calculated? In this example, on which value tax need to be calculated? Income tax on 50 or 35? tax need to be calculated on 50 lakh or 35 lakh students? Suppose we are under optional tax regime. ठीक है, ये भी देखना पड़ेगा of course कि optional है उसके अलग रूल है. Of course, the correct answer is 50 lakh. Absolutely perfect because he has taken 50 lakh rupees. So tax would be calculated on 50 lakh. Under optional tax regime, the tax on 50 lakh would be almost 13 lakh 12,500. Fine. We are not taking cess, etc. It's an approximate figure. So after this tax payment, which is going to be upon 50 lakh as per slab rate, the remaining inflow in his hand after paying tax would be approximate 21 lakh 87,500 if he will get 50 lakh as basic salary, etc. Now, the second option, I could also suggest him because I have figured out if this 15 lakh he needs to incur anyhow. So why taking this 50 lakh as a basic salary and this 15 lakh, why need to expend on its own? I can structure his salary now like this also. Basic salary plus DA plus commission, etc. We will take 35 lakh rupees. And now we will take HRA because we have to do some rent expenditure. I'll also ask my employer to pay conveyance allowance. I'll also ask him to pay daily allowance, which will have exemption under optional tax regime. We can take traveling allowance also, and we will calculate that we will take these much allowances in a way that this 15 lakh expenditure will be exempt. We will find it out. It's not that simple. We have to find out how much rent we need to pay, the conveyance allowance, etc. So you will see a salary structure. If you will check your parent salary slip or your brother, sister, you will see this is not only basic salary, it has been divided into these allowances or some perquisites. So if I'll design that this 15 lakh expenditure वो मुझे करना ही है, ये खर्चे तो मुझे करने ही है, खुद से करूंगा तो भी एम्प्लॉयर से अलाउंस की तरह लेकर करूं तो ज्यादा बेटर है. Why? If I'll do it on myself, then the taxable value would be 50 lakh. But if I'll take these allowances in the form, these expenditure in the form of allowances, which is exempted under income tax, then my taxable salary would be only remaining 35 lakh. And now the tax will be calculated on 35 lakh would be 8,62,500. If I'll reduce this out of 50 lakh rupees package, 15 lakh will go as an expenditure and tax is also going to be reduced. So if I'll reduce this 15 lakh and this tax, so the remaining would be 26,37,500. So my cash inflow in this case would be 26 lakh, which is in comparison to this case would be 21 lakh. So the difference of cash flow is 4,50,000. This would be my saving. And now what will happen? I will charge from my client for this advice. I will say, okay, I need 50,000 rupees. And I'll tell you how can you save rupees 4,50,000 by just changing your salary structure. So this question is not having any single answer. Now there could be multiple cases where I can include some perquisite also. Like for meal perquisite, I can insert the meal perquisite coupon feature, which is having a exemption of 50 rupees per meal. I can take car perquisite. So we need to work on it. It's not as simple as that. I'm just trying to show you. There is no specific answer of this question. It will change depending upon the situation of the questions. Understood? So in examination also, it would be a journal question. Now you can go through it, and exactly the thing is just saying you that you have to see which are exempted allowances you have to claim. If the contribution to provident fund, it should not exceed 12%, up to 12% is exempt. Interest should not exceed 9.5%. So this whole provision, the concept is just saying one thing, that you need to correlate it with salary chapter. You need to find it out. Those are exempted perquisite, exempted allowances. You need to insert that in your salary structure to claim the maximum benefit. So you would be able to minimize your tax liability and increase your cash inflow. So you can go through it all points we have already discussed in the salary chapter. You can see they are saying dearness allowance. If dearness allowance there, dearness allowance should be as per terms of employment. That will give you benefit. Leave travel salary. So the limit of family and children you have to keep in mind. Up to only that value you should travel, for which there is exemption under income tax. Rent-free accommodation or HRA, there is a possibility that taking a rent-free house is benefit, or instead of that, HRA is benefit. It would be depending upon the other information. What is your rent factor, which city you are staying, what is your salary structure, etc., etc. So pension, provident fund, they all topics we have already discussed in salary topics. So they're just telling you every point of salary that you have to keep the provision of that topic in your mind while deciding your salary structure. There's nothing new, nothing new. And you can also check whether it's beneficial under default tax regime or under optional tax regime. That is also a scenario. So this question can have multiple permutation combination in respect of allowances, in respect of expenditure, your tax liability, your default tax regime, optional tax regime, etc., etc. So please go through with this concept and you will realize there is no specific answer of this question is there. Then illustration 1 and illustration number, you can try. Illustration number 2 is for your homework. 1 is very simple. Illustration 2 is for that salary structure. This is very important. This is for homework. Koi problem hoga, we will discuss it tomorrow. But this will show you what kind of question can be asked from this salary structure question. And now you can see he's a salary employee getting this much amount for salary. He's option to take HRA or rent-free house. And the solution will tell you which is beneficial from the point of view of inflow and minimizing the tax liability. Once go through with this, you will understand the whole concept of this structure question base. Okay. So if there's any query, student, you can ask. If there is no query, we are going to, chalo, let's start a small story. Until that, you can send your query also. छोटी सी स्टोरी है एंड एज यूजुअल हमेशा स्टोरी हिंदी में होती है. तो एक गांव था, वहां पर दो दोस्त रहते थे, पड़ोसी एक साथ. तो एक दिन ये दोनों मिलकर एक नर्सरी गए और नर्सरी से 10 प्लांट्स लेकर आए. एक दोस्त ने अपने घर के बाहर 10 प्लांट लगाए, दूसरे ने भी अपने घर के बाहर 10 प्लांट लगाए. सेम फर्टिलाइजर, सेम केयर करते थे दोनों अपने सारे प्लांट्स की. बिल्कुल सेम तरह से केयर करते थे, वाटर देते थे, फर्टिलाइजर्स देते थे. बट जो एक फ्रेंड था वो सिर्फ वाटर देता था, फर्टिलाइजर देता था और केयर करता था. दूसरा वाला था वो ये सब करने के साथ साथ हर कुछ दिनों बाद, लाइक हर वीकली आकर अपने जो प्लांट्स थे उन सबको अच्छी तरह से पकड़कर थोड़ा सा हिलाता था, शेक करता था. लेकिन ऐसा करने से प्लांट्स हैं उनको बहुत तकलीफ होती थी, बिकॉज उनकी जो रूट्स होती थी वो रूट्स हिल जाती थी नीचे से, और उन प्लांट्स को दोबारा से उन रूट्स को ग्रैब करने के लिए फिर मेहनत करनी पड़ती थी. तो वो हर वीक ऐसे एक बार ही करता था और उन प्लांट्स को उससे काफी दिक्कत होती थी. तो वो जो प्लांट्स दोनों पड़ोसी थे, तो जो दूसरा वाला प्लांट का ओनर था वो ऐसा कुछ नहीं करता. तो वाले प्लांट्स काफी खुश थे कि हमारा ओनर हमें कोई प्रॉब्लम नहीं देता, सिर्फ फर्टिलाइजर देता है, केयर करता है. ये वाले प्लांट्स काफी दुखी थे कि ये बार बार हमें आके परेशान करता है, हमारी को तकलीफ होती है, हमारी रूट्स डैमेज हो जाती हैं, फिर हमें दोबारा से ग्रो करके रूट्स को स्ट्रॉन्ग करना पड़ता है. तो वो जो सामने वाले प्लांट्स थे वो काफी खुश रहते थे कि हमारा वाला ओनर अच्छा है. अब हुआ क्या, कुछ महीने बाद, कुछ साल बाद, तो थोड़े प्लांट्स बड़े हो गए. हर दिन वो ऐसा ही करता था, हर हफ्ते बाद ओनर आके वापस से उन्हें परेशान करता था. तो एक दिन बहुत तेज आंधी आई, बहुत तेज. और तो बहुत तेज आंधी आई तो वो वाले प्लांट्स जो उसके पड़ोसी के यहाँ थे, जिनकी सिर्फ उसका पड़ोसी, उनका फ्रेंड केयर करता था, उन्हें परेशान नहीं करता था, उनमें से काफी सारे प्लांट्स टूट गए. एंड जो ये वाले प्लांट्स थे ये स्ट्रांगली खड़े रहे. एंड इन दैट डे इन प्लांट्स को रियलाइज हुआ कि हमारा ओनर हमें परेशान करने नहीं आ रहा, ही वॉज जस्ट ट्राइंग टू मेक अस स्ट्रॉन्ग. क्योंकि जब भी आप प्लांट्स को शेक करते हैं उसकी रूट्स टूटती हैं, उन्हें दोबारा से ग्रैब करने के लिए और नई रूट्स क्रिएट करता है. जैसे जब आप जिम जाते हैं तो मसल्स स्ट्रेच होती हैं, एंड जितना आप जिम करते हैं आपकी बॉडी की मसल्स और स्ट्रांग होती जाती है. इन द सेम वे वो जो रूट्स डैमेज होती थी वो दोबारा से और स्ट्रांग बनती थी और अच्छी तरह से सॉइल को ग्रैब करती थी. तो उन्हें रियलाइज हुआ कि एक्चुअली हमारा ओनर हमारा को प्रिपेयर कर रहा था फ्यूचर के लिए. उसको पता था कि यहाँ आंधी आती है, किसी दिन तूफान आएगा, और अगर मैं सिर्फ केयर करता रहूंगा और इनको इस तरह से नहीं तैयार करूंगा फ्यूचर के लिए, तो दैट वुड बी अ प्रॉब्लम। इन द सेम वे, आपकी जर्नी में ना जो आपके वेल विशर हैं, आपके पेरेंट्स हैं, ब्रदर है, सिस्टर है, ऐसे रिलेटिव जो सच में चाहते हैं कि आप कुछ बन जाएं, वो आपको क्रिटिसाइज करेंगे। होगा आपके घर में कोई ना कोई आपका भाई बहन मम्मी जो हमेशा कहते हो कि पढ़ते नहीं हो, मोबाइल चलाते रहते हो, बाहर घूमते रहते हो, पढ़ लो, केयर कर लो। तो सोचो, मे बी आपको उस वक्त बुरा लगता होगा कि यार ये हमेशा डांटते रहते हैं, ये हमेशा हमें क्रिटिसाइज करते रहते हैं, या कहते रहते हैं तुमसे नहीं हो पाएगा अगर नहीं पढ़ोगे तो। और वो दोस्त अच्छे हैं जो कहते हैं कोई बात नहीं हो जाएगा, मत पढ़, क्या करेगा पढ़कर। वो रिलेटिव भी होते हैं ना जो कहते हैं कोई बात नहीं, मत करना चाहिए, कोई फर्क नहीं पड़ता। वो एक्चुअली डेंजरस लोग, जो आपको ऐसे क्रिटिसाइज कर रहा है ना, आपको पता है जो क्रिटिसाइज करने वाला फैमिली वाला है, दे लव यू, एंड इफ समबडी हु लव्स यू व्हेन दे क्रिटिसाइज यू ना, तो वो एक्चुअली आपको प्रिपेयर करते हैं फ्यूचर के लिए। Life is not that easy. You are protected, well protected now. But once you will go into the market after becoming a CA, then you understand how selfish this place is. So they are just protecting you. They're just preparing you. So maybe आपको जब किसी अपने well wisher आपसे बार बार ये कहता है कि अच्छी तरह पढ़ो, don't make yourself feel that they are actually against you. They are just trying to make you stronger. प्लीज ये ध्यान रखो और ऐसे लोगों की केयर करो। बुरा मत मानो, स्माइल करो, उन्हें थैंक यू बोलो। अब जो ऐसा बोलता है ना क्या करोगे पढ़कर, पढ़ने से कुछ नहीं होता, अरे हो जाएगा सी यार, हमसे ज्यादा मत पढ़, मेरा भी हो जाएगा। दे आर डेंजरस पीपल, लीव देम, लीव देम। प्लीज रिमेंबर दिस स्टोरी, दिस इज वेरी वेरी इंपॉर्टेंट फॉर योर लाइफ। आपको लाइफ में जब भी कोई आपका वेल विशर आपको टोकता है, आपको क्रिटिसाइज करता है, टेक इट एज अ कॉम्प्लीमेंट। अंडरस्टैंड हाउ मच दे लव यू, हाउ मच दे केयर फॉर यू। जब रात को बाहर जाते हैं, पेरेंट्स कहते हैं ना गाड़ी धीरे चलाना, जल्दी लौट कर आ जाना, मे बी वील फील कि हम बच्चे हैं क्या। एक्चुअली दे लव अस, दैट्स व्हाई दे केयर फॉर अस। सो दैट वाज अ स्टोरी। लेट्स सी इफ देयर इज एनी क्वेरी फ्रॉम एनी वन ऑफ यू। कल क्लास है, लास्ट क्लास है हमारी इनकम टैक्स की, तो प्लीज, मैंने जैसे कहा है, चैप्टर 1 बेसिक कंसेप्ट रेट्स प्रोविजन, salary provision little bit, and PGBP basic provision. Please revise them because we are going to solve the question of computation of total income and tax liability. So that will help for you as well as me to make you understand the provision easily. तो बच्चों कोई क्वेरी है तो पूछो। I guess there is no query. Isha is saying thank you, sir. Thank you, Isha. Sudhir is saying thank you. Thank you. Suridhar, not Sudhir, Suridhar. Sridhar, sir. My bad. Lakshmi, okay, welcome. Nitali, you're welcome. Okay, so Sanket ji, there is no query left, so can we close the session? Thank you, Sanket. Have a nice bye.